Well, we have made it to February and want to bring you the latest data here in the Austin metro area. Is appreciation making a comeback? While we've been on a downward slide for it feels like almost 3 years now, the market's really had to readjust, not only after the craziness of the pandemic, but also with all the inflationary costs of higher interest rates, higher insurance, higher property taxes. But I'm going to show you in the data today, just like I predicted at the beginning of the year, I think there are signs that Austin is starting to slowly recover. And we are getting back on the appreciation track. So let's take a look. This data right here is from December. So this is number of home sales in the metro area, not price. So if we look at the orange line, this was last year. Our number of sales was about even with 2022 and a little above 2023. So nothing amazing there. You can see how many sales we had during the pandemic, way, way higher. If we go to sales volume, this is dollar amount. That was a little better than the last 2 years. Again, nothing crazy, but we see the dollar amount go up. Here's the median sales price. This is where it starts to get interesting. So again, the green line is 2020. That's where we started at the beginning of the pandemic, down here in January, just above 300,000. That year, we just kind of went up straight, other than the little COVID blip in March, April, and May. Once everybody got used to that, bam, everybody came out, low interest rates, and took off. By the time we got to 2022, that's where you see this huge camel hump at the top of the chart. That is the peak of the market. And yes, we've had a sizable correction from that peak. But if you look at the last 3 years, we were actually a little above trend over last year on price. And on top of that, the last 3 months of the year actually saw sales and price start to tick back up, which isn't always normal at the end of the year. Here's average sales price, again, higher than the last 2 years, lower than the pandemic. Total listings starting to tighten up. Still high and higher than we've had the past few years, but not as much of a gap as we saw, maybe peak last summer. This is months of inventory also starting to come down in all MLS areas. So we're down now around 3.5 months of inventory, which actually kind of benefits sellers a little bit. You may not have a lot of inventory maybe in your neighborhood, depends where you are, but that helps them a little bit. Let's look at Williamson County. So this is to the north. Williamson County, most of our major suburbs to the north. Again, number of home sales, they've been a little slower. So they were a little below in terms of number of home sales compared to the last 2 years. Same on volume, lower. Median sales price, lower. So Williamson County, they've seen the price. And look at last year. The orange almost looks like a flat line. Didn't go up that much, didn't go down that much, just kind of went sideways in Williamson County. Average sales price there, pretty neck and neck with last year. So call it almost dead even, within less than $1,000 difference in Williamson County. Total listings actually starting to drop. They are below 2022 in terms of inventory. So again, we're seeing Williamson County start to tighten up. Months of inventory, same story, getting back down into the threes in terms of months of inventory. All right, let's look at Travis County, which also includes Austin and the suburbs east and west. So again, number of home sales pretty neck and neck with 2022, better than 2023. Sales volume, again, that's total dollar amount going up over the last 2 years, and median sales price neck and neck with 2022, and higher than last year by a little bit. So again, maybe not a ton, but 6,000 higher than last year on the median sales price. More importantly, see how it kind of bell curves upside down right there. It kind of turns in that September window. So we're starting to see that the price was starting to go up even last fall. Average sales price here is interesting. This is higher than every year except for 2021, once we got to the end of the year. Now, that takes into account when higher volume or higher priced homes sell more, it pulls the average price up a lot more than the median. So that's Travis County. And again, total listings dropping off pretty sharp at the end of the year. I do expect we're going to see listings climb again as we get into these spring months. Same on the months of inventory there. Hayes County to the south, this one has a little bit different story. Number of home sales way above the last 2 years. Look at that. So here's 2022 and 3 down here. They were up at pandemic levels in terms of number of home sales. Why do you think that is? It's price. So if I go to sales volume, again, as higher than any year except for 2021. Median sales price, though, below the last 3 years. Why? Because they're selling homes cheaper, and that's getting more people to move there. There's a lot of home building going on in Hayes County, especially in the Kyle area, and lots of discounted, brand new construction homes, really good deals. So if that's what you're looking for, Kyle's going to be one of those markets I would pay attention to. Average sales price, again, lower than 21 and 22, about neck and neck with last year. Total listings, a little higher compared to the previous year. So again, more homes for sale. Builders are really clearing through that inventory. Months of inventory, again, starting to come down, tightening up, but higher than we've seen in those other counties. They're sitting a little closer to 4 months of inventory. So anyways, that's a look at the end of last year. That's through 2024. This is going to look at the historic sales price trend going all the way back to 2015. And there's a story to tell here. So you can see, I mean, I don't even have to tell you when the pandemic started. You can see it on here on this chart. Here's 2020 right here. And all of a sudden, everything ripped higher in 2 years. So that's clearly when we had the pandemic gain. But if you go back and you drew a line and it just kind of followed to the right at the same appreciation level, we're getting pretty close to it. In terms of coming back down to a standard appreciation line. I bet we're about a year off from that. But again, we're getting back to where we're coming in line with long-term appreciation. The big question is, when do we get back up here at the top of this mountain right here? May 2022. Well, I've seen data that would say if we get back to standard appreciation and say it's 5%, based on Austin's growth and population growth and all that, if we can appreciate starting around now and get back to about 5%, maybe in 2030 or 2031, we're going to get back to this being kind of the median price of the market. So for those that are hoping we're going to rocket back up to the top of the pandemic price, that's not going to happen. Okay. So if you're selling right now or buying right now, you're going to be buying to today's market. You're going to buy and sell where the buyers and sellers need to price, which is going to be here in the low fours for a median for the market. We're not going to get back up to that 550 anytime soon, but maybe at the beginning of the next decade, we'll be back there. So pay attention to that. Here's number of active versus sold listings. So again, the green active listings, we're kind of at that turning point. February really isn't in the cards yet, so don't look at that. But January was higher than December in terms of listings. And I don't think we've closed, meaning in the MLS, all the January sales yet. So I expect the blue line's going to come up some. We'll see where that ends up. Those are typically December buyers. The January buyers who wrote contracts in January, are going to be closing in February. So that will be the February numbers coming up. You can see we peaked out last year and just ever so gently kind of glided down. Sales also, because of higher interest rates, it's not that they were high. We didn't have a ton of volume of sales. And nationally, sales were down to their lowest level since 1995. So it's been an incredibly anemic residential market nationally, but that doesn't have anything to do with the price. That just has to do with how many people are trading properties, buying and selling. You have a lot of baby boomers probably locked into their homes with low interest rates, and that just kind of clogs up the system. It makes it where there's not that trend of people graduating up to different homes. Let's talk about mortgage rates. So right now we're sitting at just about 7.05% on the 30-year fixed. Again, this is the par rate. So if you are a primary home buyer, good credit, getting a conventional loan, you're probably in the high sixes, call it like 6.75 today if you were getting a mortgage. If you're getting an FHA or VA, you should be in the mid, maybe even low sixes. So pay attention to that. So they're not terrible. I know we're getting used to it, I guess is the way to say it. Nobody's in love with these rates, but we've had these rates now for over 2 years. People are getting used to it. I'm going to scroll down to this chart right here. This is January, start to finish. 7% is the bottom of the chart. We never touched it. So we stayed at or above 7% on that par rate the entire month. It was a little more expensive as we were kind of in that second week in January. And since then, it's come down close to 7. We're really going to have to watch and see what happens. There's just so much going on in Washington and in the economy and all these moving parts. You really want to watch the bond market and see what happens. How are they going to react to tariffs? How are they going to react to new laws and legislation? It will settle, in my opinion, at some point, but right now we're just in that transition phase. So I think there's some expectation of inflation kind of still keeping in the bond market, keeping those rates a little bit higher than where people would like them. Finally, this is looking at, let's talk about luxury homes. So this is 2024, and I'll see if I can zoom this up a little bit for you. So if we look at Austin, this is a Texas report looking at the sales of $1 million+ homes in 2024. So last year we sold almost 2,500, we'll call them million and higher homes for $4.1 billion of volume. So yes, it's been challenging, but at the same time, $4.1 billion of residential real estate on the luxury side traded in Austin last year. So Austin continues to be a destination for high income earners and people who have higher net worth. But it was flat year over year. We weren't roaring, but it was very similar to what we saw in 2023. 23% of the dollars that came in for residential sales last year was on the luxury side. And then if we look at what types, when did they sell and what types of homes did they sell? So if we look at average price per square foot, it's pretty much double. Median homes, probably $250 a square foot, luxury homes over $500 a square foot. And then the median square feet, an average home in Austin, median home is about 2,000 square feet. A luxury home is about 3,500. So again, I would say if you did all the math, the average luxury home sold for around $1.7 million in Austin. Anyways, if you are a seller right now, the good news is I think we are starting to see the volume of buyers slowly come back to the market. We're seeing the months of inventory, at least at the moment, they've come back down. So you have a little less competition. And I think buyers have finally capitulated to these rates. Not that they love it, but it's starting to pencil where they're able to buy and sell properties right at this level. It's very sensitive. If you're a buyer right now, pay attention, obviously, to the mortgage market, have a good relationship with your lender, and be talking to them weekly to make sure that if you haven't locked your rate in yet, get an expectation of which way those rates are going to go. But the good news is we are in the cycle now. We're hitting February. I always say February through June in Austin, every year we see more sellers, more buyers, month after month after month. So this is when inventory is going to start climbing and we're going to see more and more buyer activity in the market. Anyways, I hope this was helpful. If you want to follow our videos each and every week, make sure to go to our YouTube channel at Ryan Kelly Group. You can click that subscribe button. And of course, if you know somebody looking to buy, sell, or invest in Austin, we would love the opportunity to chat with them and talk in more detail about these numbers and figure out what we can do to help them in the market. Anyways, I hope you guys are looking forward to February, and we'll talk to you next week. Thanks.